If you're done with the fluff and ready to execute on the how, then visit SheBuiltSuccess.com for the tools you need. It's time to push go and dive into real strategies, genuine understanding, and concrete steps to create both more in business and life. Head on over to SheBuiltSuccess.com for access to exclusive downloads, resources, and bonuses. Because moving boldly forward is not just a destination, it's a multi-layered journey. Let's grow and build your success together. Today, we have Erica Whatley, who not only is my tax strategist, but also a friend. Not only does she know her way around the tax law and what you need to do to get your business correct and in order, but she loves to be able to share her knowledge with her community and with me, of course. Welcome to another episode of She Built Success. So, well, Erica, welcome.
Thank you for having me.
Absolutely. I'm excited to get into this. I really look forward to just unpacking for our listeners a little bit about where they are in their journey of building a business. They might have just started, so they're in that starting entry-level phase, about under 100K. And then we have those who are in the middle. They're shifting. They're looking for resources. They're looking for ways to expand their business. They've hit that 100K mark, but they know that there's more. And they want to be able to understand what they need to do to get into that tax strategy and have the right pieces in play. And then we have those listeners who are on the scale side of things. And they're like, okay, I've been around the block a couple times, but there's something at that next level that I may not be prepared for. And so I want to look at unpacking what tax strategy looks like for companies that are in all three of those spaces so that they can start thinking about, if they don't have a tax strategist, get with Erica. Just saying, put the plug right there. But if they do, what are the things that they should be considering or looking at to be able to put their business in a good light, whether that's to continue to grow or sometimes to stay where they are for that season?
A startup company, $0 to $100,000 a year. So for a company like that, the first thing I would tell them to do is make sure that their foundation is set.
Okay.
You want to make sure you understand why you're setting up an LLC, why you want to consider electing to be an S Corp, and understanding what the compliance requirements are for that. The next phase I would tell them to do is understanding what qualifies as a business deduction for your company.
Okay. And this is still startup?
This is still startup.
Okay.
What qualifies as a deduction? If you're starting a knitting company, there's no need for you to think about buying a G-Wagon for depreciation.
Right.
You know? So the other part of that is for them to learn to research for themselves.
Okay.
Why do you feel your business needs to take this deduction? How does this deduction affect your business, but also your bottom line? And then 2, every year during tax prep, they need to be getting educated. Okay. This is how much money you had come in. This is how much money went out. And here's your difference.
And who does that education?
I always tell people you have to self-educate as well, but also talk to your tax preparer or your accountant and just make sure they have a keen understanding of your business. What's the purpose of your business? What do you need to run your business? And you move forward from there. Let's say that person has exceeded that phase. We're now $100K to $800,000 a year. This is when tax planning gets really fun.
Fun for you or fun for them or both?
For both. It could be both.
Okay.
So now we're talking about tax planning with putting yourself on payroll.
Okay.
Possibly putting your kids on payroll.
Oh.
Depending on your industry and the type of business that you have, you could actually purchase a vehicle for your business. We start looking at different structures of retirement plans, SEP IRAs, Roth IRAs, Augusta rules, renting out your home and, paying yourself for renting out your home. So that's really the fun phase of it.
Okay.
Again, education is still needed.
Yeah.
And I would say during that phase, you probably want to do your tax planning once a year.
During the scaling phase.
During the
over
scaling.
800K.
Right.
Okay.
Now, as you get closer to that 800K, you may want to start looking at every 6 months, looking at your tax plan, looking at, do I need to pay estimated tax payments? Do I need to purchase more equipment, maybe depreciate that equipment? You get kind of deep into it at that phase. Over 800,000, I'm a keen believer in checking it every 3 months.
And is it because things can shift quarterly in the business, or is it because tax rules or regulations could shift quarterly also?
All of the above. All of the above, but I would say more so because things start to shift monthly within your business.
Okay.
And sometimes you'll be able to catch those shifts within that month, but at least every quarter you can always catch up. You can now say, okay, this is what happened last quarter. This quarter we need to pay out bonuses. That could be a structure. Or this quarter we need to go ahead and plan our business retreat.
Okay.
You know, you start paying more and more attention to it. Goal is for you to not owe them and they don't owe you.
I know in the beginning when we were talking about startups and looking at LLC or S Corp, is it too early for a startup to actually look at becoming an S Corp in the very beginning, or is S Corp something that should be considered later down the revenue?
So it's later down the revenue line, but I believe in planning. To me, that's a part of the foundation.
Okay.
So if you know that you're starting this business and your goal is to really make money in this business, you should start your business thinking about at what point do I pivot? At what point or at what income level do I change my strategy? So if you go from making $5,000 a month to $50,000 a month, you waited too late if you did that jump. But you know, once I start seeing a trend of $5,000 a month to $10,000 to $15,000, now I need to change my strategy.
Let's look at the pandemic, for instance. We know that shook everybody's business to some degree. Some, trended completely and skyrocketed up. Others did not. Do you find that when you're looking at the tax strategy or just revenue coming in as a company, volatility in what that looks like quarter to quarter, year to year, month to month, and then how do you address the changes or fluctuations? So if you were, at one point on scale, so you were 800K plus, and then now you've kind of gone back to the shift and you're under that 800K, like what does that look like? Like, is that frowned upon? Like, what does that look like as with your lens? Like, what does that look like as a business?
So it's not frowned upon. I believe in forecasting for your business. Forecasting just based on revenue, based on benchmarks, based on your goals. And of course, you have to adjust accordingly.
Right.
Being that the pandemic was literally a unicorn year, I feel like it should have opened everyone's eyes to you should always be prepared for anything in business. Because you can go from a 0 to 1 million, or you can go from 1 million to 0. But what does that look like? So I say forecast.
Do you forecast both sides, the trending down and trending up?
Yes.
Okay.
Because when it comes down to it, you have to look at, can I keep my team? What services would need to be cut first? How do I sustain where I am? Or is it sustainable? Because there are a lot of companies that will think that their numbers are still sustainable, but it's not reality. You went from making $100,000 a month with $80,000 worth of expenses. Making $80,000 a month with $80,000 worth of expenses is not going to sustain you. So I like to look at it both ways.
Is there like a sweet spot where when you're considering the shift or scale, and I know startup, don't worry startups, we got you. But when you're considering the shift or the scale, is there a sweet spot where obviously you would meet regularly with your tax person or your preparer, but is there a sweet spot where you would be able to, because of course crossing that bridge, crossing the span from shift to scale, sometimes like you said, can be a drastic, it could be an incremental move. Is there like a set dollar amount to say, hey, at this X amount, thousands or millions a year, you should do this? Or is it, I know it's case by case, but
not necessarily, because with tax planning, it goes so much deeper. Because you may have $1 million company with 2 employees. I may have $1 million company with 9 employees. So we have to take that into consideration. But also, too, I may be married with 9 kids. You may be married with 1. So those scales, like you have to look at the company holistically, but then you also have to look at the person that's running the company. And then 2, it's based on goals.
Of the company.
Your goal may be to have as much profit for you to reinvest back into the company, whereas my goal is to have the company make as little as possible, or show as little as possible on paper. It's so much deeper than just the industry, but what that person goals are, how do you see your business, and what do you want to go to next?
Okay, here's a question. I'm a service-based company, but for our product-based friends, an inventory and the things that they would need to keep in their back pocket, if you will, or keep their business running, do the same rules or parameters apply when you're, scaling, going from startup to shift to scale? Or are there differentiators that companies who are service versus product-based should be looking at or considering when they're either looking for a tax strategist or talking with their tax strategist? Are there parameters that they should be considering based on the type of work that they do, whether it's service or product?
Product, their main focus is going to be increase of cost of goods.
Okay.
So you want to make sure that you're accounting for inflation. You want to make sure that you're talking to someone that understands the shift in products versus services. Let's just take the pandemic.
Yeah.
Before 2020, people could get products shipped freight for maybe $3,000-$4,000. I had clients that $3,000 went to $9,000 over the course of 2 or 3 weeks because of the cost. Whereas with service, you have a Zapier connection and you went from paying $80 to $95. So you have to look at the difference of, again, your deductions versus the cost of goods, your software and subscriptions versus someone who is product-based, their cost of goods.
And this is still in the realm of just understanding not only that foundation, but those next levels that you're looking to attain. I'm going to come back to S Corp, but I know there are other corps that hopefully you can chime in on. But for S Corp, like I know for me, we've made my company, we file as an S Corp. We're still an LLC, but we file as an S Corp. Can you talk about, and you can go as deep or as shallow as you choose, but can you talk about a little bit about like what the advantages are, S Corp, LLC, C Corp, what that may look like? We can make up a company if you want, but what that may look like on paper, but then to you as you're looking over a company and making those kind of recommendations.
So starting up, you definitely want to do your LLC, limited liability company. That is literally just for that liability. Okay, so if something happens to you, you're separated from your company. You'll still file a Schedule C, which is a part of your personal tax return, but you have a actual LLC, a business. LLC elected to be taxed as an S Corp. So S Corp, Sub Corp allows your company to file a separate tax return from you.
Yeah, that's what we do.
Exactly. So Claudia's company is separate from Claudia.
Right.
However, a part of an S Corp is you have to be on payroll. So you put yourself on W-2. It eliminates the self-employment tax from you having to file an LLC on an S Corp, which will save you tens of thousands of dollars depending on how much money you make. But also, too, your profit or your loss from your business flows into your personal return. And there are a lot of other advantages as well. And those advantages are different for some people, but that's one of the biggest advantages is the savings of self-employment taxes. When we think C Corp, let's think Coca-Cola, Pepsi, larger corporations. That entity is 100% on its own. So when Amazon filed taxes, Amazon is only filing taxes, and Jeff Bezos' taxes are totally separate from that. And C Corp, there aren't many small businesses that are C Corp. There are a few. It's not a good option for a lot of people.
Because they're not at that scale.
They're not at that scale.
Okay.
C Corp is flat rate tax, right? But if you make $100,000 and you pay 30% flat tax on C Corp, whereas you make $100,000 and you pay 20% on S Corp, those are the type of numbers you have to look for. These are not actual numbers. This is just an example.
Right. This is just this. Yeah, exactly.
But you have to look at that difference when it comes down to selections. And then, of course, you have partnerships. Partnerships is just mean you saying, hey, we're going to agree to have a business.
Yes, bourbon all the way.
All the way.
So,
partnerships just mean you're agreeing to have a business, and you can file a partnership tax return. Which is A1065. But also as a partnership, you can elect to be an S Corp.
If you're a partnership and you elect to be an S Corp, does that mean that the partners would have their own personal tax?
So the company, let's just say our bourbon company,
yes,
would have a S Corp return. And then we would get Schedule K1s, which tells us how much we split as a partner. If it's 50-50, we made $100,000. Claudia gets $50,000 on her personal. Erica gets $50,000 on her personal. So those are just a few of them, a few of the options.
We're going to pause for a second because I know you accumulated this knowledge over the years.
Yes.
And I'd like you to share a little bit about how you define success. And what success looks like for you today.
So my definition of success changes every single day.
That's fair.
It changes every single day. Today's success was I got through Atlanta traffic. I successfully made it somewhere on time. So success really depends. But no, honestly, today's success to me looked like time freedom. Time to actually say, okay, I'm going to clear my schedule and I'm going to come sit with Claudia. Or I'm going to clear my schedule and I'm just going to read. Or I'm just going to have time to myself or make time for my family. So that's what success looks like to me.
You gave both personal and professional. Do you keep them the same, or do you meaning that is the version of success that I'm defining for myself now, or do you have separate? And I'll weigh in on that for me in a second, but I'm actually curious. Do you keep the definition of success, which is what you gave, you blended both. Do you always keep them blended, or do you sometimes separate them based on?
I sometimes separate them.
Yeah.
I have to.
Yeah.
Because, like I said, sometimes, like yesterday, success was just me being able to get out of the bed.
That part, yeah.
So it just depends on the day.
For me, with success, it really is, I have like family goals and aspirations and desires. Of course, I'm a mommy of 2 teens, so we have those 2 teen girls. We have those challenges, but there's that, and wanting what's best for them, and all that fun stuff, and making sure that they're good. And to me, the success is being able to be there for the activities, right. You know what I mean? Or seeing them win a game or win a cheer comp in some cases. That part is good because I'm present. I guess that's what I'm trying to say. Right. That element for me right now is presence as a family, right? But then in business, it's like, dude, we're racking in, we're making, sign these contracts, making the money. I say that a little bit tongue in cheek. Yes, of course, you want the revenue goals and things like that to come in. But I feel like success, if we're successful and profitable, then that means my team, will also be profitable and successful. Because I believe it's very key to not uplift, yes, of course uplift, but like I want to empower my team for whatever their level of greatness is or whatever their level of success is. And so if we as a company are brought there and we're successful, then they can then have their version of success as well. So I think it's apropos, I think that's the right word, the use of the word, but I think it's apropos that both family and business, yes, they are going to come together because it's you as a person, but to have those separate and sometimes together is a good thing. It's definitely a good thing.
I think too, for me, I had to separate mine.
Why?
Because it just becomes a ball of frustration.
Ooh, yeah.
It becomes a lot.
Yeah.
So like you have teen girls. I'm outside of that phase. My daughter's 26. It's me and him. So it's like, okay, what does success look like now? Because for so long, my success was wrapped up in her success. Once she was gone and she's doing her thing, the only other success I knew was my business. And that ended up pushing a lot of personal stuff away from me. So I was like, okay, you have to separate it to make sure you're sane, pretty much.
I like that you had the keenness to know that this self-awareness, that's what I'm looking for. The self-awareness to know that they had to be separate, but then that you also knew that your daughters are a full-on grown-up now.
Right, full-on adults.
and you're able to, I guess, now reclaim time. I shouldn't say reclaim, that's not nice, but...
That's it.
Spend the time, as you so choose. Yes. Yeah. So we paused on the success part. Let's push play again because I want to get back into the LLCs because I know there's some legal shifts and changes. I kind of played before we started filming and said the LLC boy. But can we talk about what the LLC BOI is and what this means for companies?
All right, so effective January 1st, 2024, FinCEN, which is the Financial Crimes Enforcement Unit, rolled out BOI, which is Beneficial Ownership Information. So pretty much what's happening is any U.S. LLC has to register on the FinCEN website. I think it's fincen.gov. And on that registration, you're just pretty much telling who owns your company. So let's just say for Claudia, you log on and we go through it. It's going to ask you your tax ID number. It's going to ask you who is the owner. Do you have any partnerships? Do your kids have ownerships in the business? Things of that nature. And you just register. It literally takes less than 5 minutes.
And this is something that I could do myself if I...
1,000%. Okay. It's your information. Yeah, you know who owns the business. You know your address. You know all that information. But of course, if you get stuck on something, you always call your accountant or a tax strategist, whoever, to help you through it. And once you file, you just save your paperwork at the end. And you do it for every LLC. So if you have multiple LLCs and you just renew and you don't do anything with them, you still do it. If you made $1 or $1 million, you still file it. And it has to be done before December 31st, 2024. Or else you're going to get fined. This is for LLCs that was set up prior to December 31st, 2023. Okay. If you set up an LLC in the year 2024 moving forward, you have to do the BOI within 30 days.
Oh. Do they send you something to tell you have to do, or are you just supposed to know you have to do it?
I don't know if they send you anything, honestly. I don't know.
We'll get the website for the agency. Do you know what the ramifications are if they miss it or don't know about it?
It's $500 a day.
Oh, shoot. Okay, somebody's getting some
I think the max is like up to $10,000. It's like the max or something like that. And there's some other ramifications behind it, but yeah, you definitely want to get it done.
All right, y'all. If you're an LLC, get your BOI done.
as soon as possible.
Yeah. Oh wow. That's okay. I didn't know that. I mean, I know you sent out communications because
Yes.
that's what you do. You do it efficiently and effectively. But I did not know that. Oh my gosh. Do you know what the reason why? Like, why is this a thing now?
It has a lot to do with just like money laundering to kind of stop that. People
set up those corp or shell kind of companies.
Right. So just do illegal activity. So it's to prevent that.
Well, look at somebody on their P's and Q's. Okay. I forgot to say this in the at the top of it, but one thing I want to say is Erica is 1/3 of my what I call money team. Erica comes in with tax strategy. We have quarterly calls where we talk about everything from business profitability, new ventures, family, like you name it. It's
we have discussed
it's in the conversations. Jets, all of it.
Yes.
Strongly encourage, no matter if you are in the very beginnings of your business or you're on scale, to set up a money, well, you don't have to call, I call it money, I call them my money team. They know they're my money team. But set up an advisory board or a money team that can help you just where you're weak. This is not my lane. Yes, data is part of what I do, but tax strategy is not it. And I'm okay with that. And I will admit that.
Yes. Yes.
But Erica's, as part of the money team, has brought, I like my money team. I like y'all. I love y'all because you guys actually have conversations amongst yourselves when we're and sometimes I'd be like, can you translate that? Because I don't know what that means.
Right.
When we have our money team calls, like, what do you find is most advantageous from your perspective?
For us, all of us being on the call and just really going through, okay, this is the plan I have for Claudia versus this is the plan I have for Claudia. And I was like, nope, I don't want Claudia doing that. Claudia needs to do this. And it's how we work together to get you to the point where you want to be.
Right.
We don't have to agree, but we always know. Yep. We know our position, and I think we play it very well.
I 100% agree with you.
And just getting you to where you want to go. With some people, even if their money team is just them and their accountant, treat your business how you want to see it. So if you know you want to be in a position where you're making $2-3 million a year, you start treating your business like that now. Start understanding where you are and what you want.
While we're talking about that team building, especially in that advisory capacity, do you have any suggestions or things that companies and businesses should look out for when they're seeking a tax strategist or an accountant or insert money team folks?
So I always tell people, when it comes down to someone working with your money, at this point we're married, be prepared and be with someone that you're comfortable talking to, being open and transparent with. What was the old saying? You don't lie to your attorney, your doctor, and your accountant.
Girl, I can't quote a quote to save my life, so that sounds good to me.
So you have to treat that person or your team as the people that you're married to. You have to be able to get along. You have to understand. You're not going to agree, but we know that we're doing this together for a greater good. Yeah. That would be the first thing. And just someone that you feel comfortable being able to say no to. Or I want to change positions. I want to pivot. And that person understands that they're going to pivot with you. Right. So those would be the main things that I'm looking for.
What about opposition, and a good opposition? So I come to you all and you all know my endeavors. And if there's something in that endeavor where you're like, Claudia, pump the brakes on this. Do you think that, how do you uncover, I'm comfortable with y'all, so, I'm fine. Y'all be telling me pump brakes or slow your roll or something like that. Then we have to slow down a bit. But finding that opposition or that, which is needed, that challenge, if you will, how would you say someone is a good way someone can go to uncover that, to find a person like yourself who will be able to be like, yeah, no, you might want to consider something else? What are good markers, I think, is what I'm asking.
Have they worked in your industry before or with your industry? Do they understand the risk that come with some of these investments? Like when we discussed the jet. Yes. We had to go down that list of, hey, this is the risk. It sounds beautiful, but this is the risk. Asking questions. They have to be comfortable asking questions and asking uncomfortable questions. And really understanding, okay, you say this is a goal, but is this really something that you want to do? Or is it just how you feel right now? Really asking the hard questions is going to be the main thing.
And I'm putting myself on the chopping block again because why not? So for the nonprofit, for Black Girls Fly, which we are officially a 501c3. You heard it here. Yes, very excited. I know when we originally, had the meetup and the conversations, it was around the LLC, for Capital Consulting Group. But do you think that since I now have a nonprofit, that it would make sense to, of course, still talk about it in the money team, or should we be looking to get the nonprofit its own quote unquote money team?
No, we'll still talk about it until we get to that point. Yeah. Because with what you're doing and the purpose behind the nonprofit, and where we see it going, you want to set the foundation right. Once we set that foundation right, then we're going to expand into, hey, I can't be a part of it, but let's interview the person that can. Because once you get to a certain point with that, we may not be who you need to take it further. So it's just based on that.
Fair enough. I'm excited because, interestingly enough, we talk about startup shift and scale.
Right.
We are in startup with Black Girls Fly. And I think the same, I know we didn't talk about nonprofits in terms of, we did LLCs, S Corps, C Corps, but I think there are still some, like you said, very similar attributes that nonprofits could then translate into what that would look like for them. So you still need that foundation.
You do. And with nonprofits, you legally need that foundation.
Yes.
So
yes. That's new waters, but here we go.
we're going to jump in together.
Right, exactly. So what do you think is on the horizon for in the tax industry? I know obviously we don't like to date things, but we're in an impending election and things of that funness. So what do you think is kind of on the horizon for tax law?
Lots of changes.
Yeah.
Lots of changes. Like right now, they're trying to determine if they're going to raise the CTC, which is the child tax credit, increase it. January 29th is the start of tax season. But we have to wait to see if it's going to be increased before we actually file people's taxes. So I think we're going to see a lot of changes that way. I think we're going to see increase in taxes, in tax rates, just like we're seeing an increase in inflation. I think it's definitely going to be a lot of changes there. As far as
She's like,
the election,
I mean, you can say Switzerland. It's all good.
Yeah, like I'm trying. There's no politically correct way to say it. I just say be prepared for anything and everything.
Yeah.
Just be prepared for it. I think a lot is going to shift, and it's not going to shift in a beneficial way to us. So you just have to be prepared for it.
Well, now accepting applications. You heard it first from Erica. Right. I think that I'm with you. I as long as we've been working together, I've seen the, not quite pivots, but the adjustments that we've had to do with the company just in growth and in strategy to make sure that we're in the best position. I think that at this point, we're going to actually look at just, what this new year has to offer.
Exactly.
In the realms of just being prepared for, like you said, plan now. So being prepared for what's to come. Any parting words before we wrap?
People, do your research.
Yeah.
So many people are damaging themselves listening to social media gurus. And don't get me wrong, there are some amazing CPAs and amazing tax strategists and CFOs on social media. But a lot of people are only giving you the bones and not the meat. They're giving you piece by piece, and people are running with this information, and it's wrong. So do your research. Yeah. If it sounds just way too good, it's probably not right. You're probably missing a lot of the information. So that is something I would tell everyone to do.
No, that's very key. And in case anyone's curious, Erica and I met through third of the money team, our CFO, Kendra, who you all will have the lovely pleasure of meeting here in the future. But so I'm with you on the research. Research, and I hate to say no, you're within your network, but really and truly, a lot of the relationships that have been cultivated with yourself, with us, those that you can't see off camera, but the video team and operations team and such, has really been through relationships. So I'm with you. Do that research. Use your network. Build those relationships and rapport, and get that money.
Pay people for their information. If you get a referral to a great accountant and someone has helped them, pay these people. You want the information, they're going to walk you through it, set you up right, pay them. Yeah. That's the big thing for me.
Yeah. No, that's a good point. That is a good point. Everybody want anything free 99. Like, no ma'am, no sir. Erica, thank you for joining me.
Thank you.
On She Built Success. I wish you much success for 24 and beyond. Thank you very much. And definitely tune in. I'm Claudia, and this is She Built Success.